Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Friday. Yeah. Ooh, it's going to be a long one. It is going to be a long one as we're going to be here all afternoon handling all the Texas stuff, but we won't get into that just yet. It is Friday. Sit back, relax. Strap on the seatbelt and leave the drive-in to us. Our toll-free number, 800-951-0592. The website at allamericangold.com. Of course, what do? Wealth insurance. What's wealth insurance? Simple. Gold and silver. That's what wealth insurance is. The physical delivery of it. Why do you buy it? Well, it's real simple. Gold, it's the only thing that really protects you from inflation. It really is. You know, think about 20 years ago. Gold was like $300. Now it's $3,400. Or whatever you could have bought then, you can still buy today. And guess what? Really, you can buy a little more, can't you? You know, go back to Roman times, right? A gold piece in Rome back in the day, bought you a toga, right? Some sandals and a really nice belt. Of course, today, yeah, buy a really nice suit, really nice belt, and a really nice pair of shoes. I mean, you'd have to try hard, right, to spend more than you could, right? I guess you could buy, I don't know, an Armani, Gucci, something suit or something like that, but you get the idea, right? That's incredible. Thousands of years, and it still buys the same thing no matter what the price is. Yeah, that's what gold does. That's why we call it insurance. Protect what you already have. Because let me tell you something. You ain't going to have it much longer. Well, some of us won't. The majority of people won't have it much longer. Some of you listening, you'll be okay. You've gotten enough wealth that you can probably get away with it. The rest of them, they have no idea what's coming. You guys are lucky because you listen to this show. What a godsend it really is. It really is. You're more prepared than anybody out there. And you know what's funny? You already know it. And still, you try to tell your buddies, your friends, they don't want to hear it. They get it. Hey, yeah, all right, gold, okay. Okay, you got us on that one, right? Yeah, I should have bought it. You going to buy something? Nah. It's too expensive now. Texting, oh, no, it sounds like a pyramid-y thing. I don't know. Nah, I'm not doing that. No, good luck to them. Good luck to them. A lot of things happened again in 24 hours. We had, it's hard to say, you know, we had a 3-year auction a couple days ago. It was bad. We had the 10-year auction the other day on Wednesday. It was worse. Yesterday, we had a 30-year auction. It's hard to even say. It was even worse. Like it was the worst of the worst. Just horrible. But guess what? That's not everything we're talking about here. My brother's calling me. You know what? He's in West Virginia. He doesn't know. I mean, probably wants to buy more Texas. But Donald Trump has picked a replacement for Kugler. I think by who he picked, we're more confident that Chris Waller is going to be the guy because he didn't pick Kevin Warsh or Kevin Hazard. But the guy that he put in there, you talk about, he's another yes man for the Trump administration. Stephen Marin's his name. He is going to replace Kugler immediately and serve out the remainder of the term, which expires in January, the last day of January 2026. He's the current counsel on economic advisors for the Trump administration, super critical of Jay Powell. I think this is all but going to guarantee a rate cut in September, because that's going to be, I don't know that Powell will have enough votes. And then on top, if that wasn't enough, Bloomberg's reporting now, I don't know, we'll see. Washington and Moscow are aiming to reach a deal to end the Ukraine war. I'm a little skeptical, only because what they're saying is the United States says, yeah, let Russia have the territories that they want, right? So Russia, in this, would cede its eastern part of the country, the Donbass areas, to Russia, as well as Crimea. Of course, they need Zelensky to say yes. I mean, I think this deal's been on the table the whole time, right? I don't. We'll see, right? So, I mean, well, maybe Trump's going to tell Zelensky take it or leave it. I don't know. We'll see. You never know. You never know. We'll be back after the break. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Friday. Quick look in at the markets. The market's off the highs here. It's a little surprising. Up 140. The S&P's up 42. The Nasdaq's up 174. The 10-year note higher here, 428 and rising. Again, it's just an overwhelming amount of debt. So the auctions have not gone well, and we went, I guess, there was no good. We went bad, ugly, and really ugly in the auctions this week. And then the bigger news, and obviously looking at crude oil here, down a little bit, just under $64 on the news that listen, I get it, right? If I'm Donald Trump, I'm like, yeah, let's do that deal, right? And of course, Putin's like, yeah, right? We're in. Let's get her done. I don't know. Isn't this what the whole war is about to begin with? But we'll see what happens. No,
the war's about possession. It's about property. It's about assets, always.
Yeah. And gold, depending on where you look. Okay, so spot gold's down $5, $33.92. TV gold's up $40, $34.92. You're like, wait, Joe, come on, wait a minute. What are you talking about? How can this be? How can December gold be almost $3,500? Right, $34.92.50. And you're telling me spot gold's essentially $100 lower. That's not right. Oh, yes, it is. Let me tell you why. The banks right now are been caught off guard. So another thing that happened yesterday. We're mad at the Swiss for something. I don't know, right? Donald Trump's mad because all as we do is buy Rolexes and chocolate, and they don't buy nothing from us. I don't know. And he slapped this tariff on. Now, everyone knew that was going to happen. What they didn't expect was that Donald Trump was going to include the refined gold in the tariff, essentially making the United States the most expensive place in the world for gold. Because the Swiss, Jason, they're the refiner of the world, right? Everybody sends their crap to Switzerland. They refine it, and then they send it out in an unprecedented move, sweeping tariffs on the import of 1 kilogram and 100-ounce gold bars, right? So these are the delivery-type bars. The decision confirmed Thursday by Customs and Borders in a letter dated from last week. This was something that was unexpected. They thought that would be exempt. And listen, everybody thought it would be exempt. A 39% levy will be on all of the gold bars coming out of Switzerland into the United States. A scramble by investors. Liquidity at the COMEX and the London Exchange has seized up as U.S. buyers face bottlenecks for higher cost. And essentially they're saying, Jason, this firewall between the paper gold and the physical gold may be broken here. So you're seeing, like I said, the spot month here, right near $3,400, as these banks are scrambling. But when you look at the most traded contract, it is the December contract. And Jason, it literally has gone through the roof here. Forget it. And again, guys, gold was going here anyway without this. This just makes it happen faster. Essentially, I don't know what's going to happen here because 100-ounce bars and the kilo bars, they are super common. What I mean by that, jewelers buy them. That's how they like to buy them. They don't buy them in 400-ounce bars that London has. They like the 100-ounce bars. They like the kilo bars. This is also very popular with the hedge funds and pensions and things of that nature. And now, essentially, the United States, because remember, there wasn't enough 400-ounce bars. So the U.S. and the COMEX, they've been using 100-ounce bars. All right, well, we'll just take 400-ounce bars and call it a gold contract. This is essentially going to really mess with the physical gold supply. And I don't know that there's an easy answer, right? It's not like you flip a switch and say, okay, well, let's just make them 400-ounce bars, send them to London, and then I guess London can send them to New York. It doesn't work that way, right? Hey, this machine makes 100-ounce bars. This machine makes kilo bars, right? They don't make those bars. I don't know. It's going to be another one of the things. How long will it last? I'll just say this. The fact that they haven't issued a reprieve already is insane to me. And it looks like this is going to be here for a while. A lot of people are speculating. I don't know. Listen, we've had terrible problems in the auctions selling all this. Remember, we had $100 million of 4-week notes. Why did we have to do that? Because the Treasury knew. Well, gosh, if we try to make them 3-year notes or 10-year notes or 20-year notes or 30-year notes, they won't buy it. Look at what let's look at what I just told you today. Donald Trump appointed a replacement for Kugler that essentially is an automatic rate cutter. That's 3. Then Kashkari says, I want to cut rates. That's 4. Jay Powell is going to be forced to, I think, one way or another, cut rates. It's locked in. And the 10-year note went from 4.20 to almost 4.30. The opposite direction. Why? Because they can't sell the debt. That's why. You think
Powell would be forced into dropping the rates? You think he'll He'll have to do it?
Yeah, because I don't think he would stand to have 3 or 4 dissenting votes. Right? You got to remember, 2 dissenters is like, oh my gosh, hair on fire. What's wrong? Like that's not ever supposed to happen. You got to go all the way back to 1993. Think about it, they have 8 meetings a year. 8 meetings a year. And it's the first time, this last meeting was the first time since 1993 there was 2 dissenters. I don't think, a matter of fact, I guarantee it, they will not allow 3 or 4 dissenters. Jay Powell will let a rate cut happen. I think he'll be forced into it. This kind of a way to force him into it. But here's the thing that people are speculating now. Remember, we talked about this a while back. Secretly, the United States wants a much higher gold price. Why? Well, as you guys know, we allegedly have 8,000 metric tons of gold. It's valued at $42. If the U.S. decides to revalue that gold, okay, think about this now. You could almost come up with $1 trillion. And see, they can play a paper game because right now the gold is listed on the Federal Reserve's balance sheet. And essentially they could do a wink, wink, nod, nod. Hey, we'll give this $1 trillion to the Treasury and we'll act like we bought some debt with it, right? You know, essentially tie up the gold with treasuries. This has gained a lot of steam in the last 24 hours with the Trump administration. Think about this. They essentially put a 40% tariff on the world's major gold refiner that delivers all the bars to the exchanges. And Jason, a lot of people are saying they're doing this. They want to drive the price up. So in other words, they're like, well, $3,500 gold's not enough, right? We want, you know what? Why can't we get $2 trillion? Let's drive this thing to $5,000, right? Yeah, obviously, the United States can't come out and say, our gold's now worth $10,000 an ounce. They can't do that, right? They just can't. It just crush the whole paper market scheme and all of that. They've got to figure out a way to drive up the price without saying they want to drive up the price. And Jason, I think this is a way that this absolutely will happen. Just look at what's happening to the December gold contract. I've never seen such a gap between the spot month and the most heavily traded contract ever. I mean, this thing's getting ready to really start stretching out here.
Well, I keep thinking about the rates and Jay Powell. I'm going back to that as you're talking. Is it possible that he holds his ground even with the heat that you say he's taking, and then they make a big show of him being replaced, physically thrown out?
I would say this. If that would happen, if the vote came in at the next Fed meeting 6-3-5-4 and I don't care, 4 rate cuts, not 4 rate cuts, they'll run Jay Powell out. Yep, I think they would. I think the Wall Street would go up in arms for that. You can't allow for more than 2 dissenters. It just doesn't work. We'll see. And again, what was scary about this, think about what we got today. Okay, we got Mirren in at the Fed, right? So you're pretty much saying the rates are coming down. Then they leak a report. Hey, us and Russia, we agree. Let's just give Russia the Donbass and Crimea and call it a day. The 10-year note should be closing in on 4%. Instead, look at what it's doing. It's going the other way. Why? And, of course, I'm telling you why. It is overwhelming what it is the United States has to do right now. And I will say this. There is logic. Now, it's not good logic, but there is logic. If you can get the price of gold to $5,000 or $6,000, you give yourself some breathing room on paper, right? They can do a paper game and absorb a lot of this extra debt the Treasury is being forced to sell by simply revaluing your gold holdings. I don't know. I'm not saying that's what's happening, but boy, it certainly looks that way, doesn't it? We'll be back after the break. 800-951-0592. We got a lot more breaking news now. Listen, $20 gold pieces, $14.95 at 800-951-0592. $10 gold pieces, $17.50. There you go. That's the best I can do. That's it. That's all there is. Listen, December's already there. December's already there. Word now breaking, there is problems in London. The paper markets are scrambling and to source bars. How important is Switzerland in the gold world? 90% of all refining happens in Switzerland. It's incredible. Kind of stupid, right? Kind of looking at it, right? It's probably not going to be the case anymore. Also, word out of China that the Shanghai Exchange may be trying to exacerbate the problem by taking deliveries of all available bars, putting stress in London as the paper guys are trying to roll out of this contract. They're trying to roll out of the December contracts, right? They're trying to get out. And, hey, we'll put a short, because, listen, banks short gold. That's just what they do. It's not a secret. It is what it is. That's what they do. They short it. So they want to get out of these contracts, right, and reposition into a contract in the future, right, and possibly go long. I don't know, but whatever they're going to do, the problem is they need to have the bars available to do it. And they're saying that a squeeze right now is going on in the exchange for physical, saying that a massive closeout of short positions is triggering a need for funding in London. Okay, so that just means two things. Number one, banks are taking losses. Number two, if word is right, and whether it's the Chinese or somebody else saying, we want our gold, send us the bars. And Jason, it appears, at least for right now, if this thing goes much further, London's in big trouble. And, of course, we know China's been angling, right? They want to take over as the spot capital for not just gold and silver, for all metals, right? And China's got a claim to it. Hey, no one buys more gold than us. No one buys more silver than us. No one buys more copper than us. No one buys more aluminum than us. We should be in charge. And it's interesting what's playing out in the gold market right now.
Wasn't China the ones that got the nickel market shut down during COVID?
Yep. Yeah.
They had to shut it out because the nickel price is about to skyrocket.
Well, one of the Chinese guys got caught on the wrong side of that trade, and it was funny how they fixed it, too. Never mind. We'll just pretend that price didn't happen, right? And we'll make it so you don't go out of business. And it's always, The rich get richer, don't they? The rich get richer. 800-951-0592. I don't know what happened with Wall Street here. Man, they were looking so good, and then it's kind of all crumbled here. We'll see what happens next. If you're just joining us, some major developments. The first being Stephen Marin has been selected to replace Kugler at the Fed. He is a part of the Trump economic team, is a rate cutter of epic proportions, but he will not be the next Fed chief. They've made that very clear, which would mean now that would be at least 3 dissenters, and that doesn't happen. That just doesn't happen. And if you throw Kashkari, who says he wants rate cuts now, that's 4. You could all, but one of 2 things. Either Jay Powell says, nope, I don't care, I'm not doing it, and they run him out, or the rate cuts start at the next meeting. On top of that, the auctions in the United States, the bond auctions have gone very poorly. And listen, guys, I'm worried. We don't talk a lot about it. But remember, any day, one wrong step in Japan and the bond market implodes. And this is kind of the problem that we look at 4.29 to get ready to go 4.3 here on the U.S. 10-year. Jason, this is the problem. The bond market's good until it's not. And then once that thing isn't, then you've got problems. And then Switzerland and the U.S., the Swiss were here last week. They signed a deal. And everybody thought, okay, 39%, but it's not going to be on gold. Right? I guess we'll hit Rolexes and chocolate, but they won't do. Gold will be exempt. In a shocking move, the Trump administration says no. Gold will be part of this. And all of a sudden, we start hearing about the United States wanting higher gold prices and potentially revaluing its gold to give relief to the U.S. debt markets. And they're like, well, how does that work? Simply put, the Federal Reserve, because the gold's on the Federal Reserve's balance sheet, they will loan it to the Treasury. That's how it's going to be a paper deal. And so all of a sudden now people are saying, well, gosh, if they're going to do it, it makes sense to let the gold price be as high as it possibly can be to revalue. And Jason, I'm looking at, okay, it's a 40% tariff. Does that mean they want, does the gold price go up 40% from here? I don't know if it'll work that way, but it certainly is a possibility.
Well, I think that's why there was a lot of gold moving very quickly, right, before the tariffs. But let's go before the tariffs. We had gold moving for years.
Oh, gosh, right?
So it's almost like they're is it planned out? I think it is. Get the gold where you want it, distribute it fairly all over the planet. Then you tariff things, and everything's rebalanced in a world monetary system.
800-951-0592. Jason and I, we're going to be right back. What a Friday, right? 800-951-0592. Patriot Radio News Hour, Joe and Jason on this Friday. $20 gold, $34.95. Boy, don't you wish you bought the other day, huh? $10 gold, $17.50 at 800-951-0592. Shockwaves through the gold market today as the Trump administration, a 39% tariff on refined gold from Switzerland. 90% of all the refined gold in the world comes from the Swiss. Listen, it's like a system. They send it London. London ships it to Switzerland. Switzerland cuts it down to send it to New York, and vice versa. It's like a triangle. Everybody's scrambling. Right now, the spot price is contained here, I guess, at $33.95. December gold now, $34.95. $34.95. And if you take that December contract, you take 40%, that puts gold at $4,900, right? So is the U.S. targeting $5,000 gold to possibly revalue to provide relief to the Treasury Department? I don't know what's happening exactly. If it was, listen, I can't tell you how bad the auctions were this week. That's how bad they were. There wasn't a good one in there. And, of course, the 30-year was the worst of them all. A very ugly tailing auction. The biggest tail, wow, 2.1 bips, as they call it. That is incredibly long tail. The bid to cover was an absolute disaster, having to go way below the averages, and the internals were not very good either. The indirects dropping again. That's the foreigners. And, of course, the dealers left holding a whopping almost 18% of that 30-year auction. By the way, that was $25 billion. So, again, the banks, right, getting squeezed with their capital being forced to buy. Imagine if the bankers were like, well, gosh, we can't absorb 18%. We only can absorb 15%. We only can absorb 12% or 10%. How high the yields would have been. The banks are being forced to try to keep these yields in play. It does make sense to me that the United States is going to use every tool at its disposal. And, Jason, we all have to admit, listen, revaluing gold and wink, wink, nod, nod, letting the Treasury borrow it to alleviate the avalanche of debt is an option.
Yeah. Oh, yeah. Any action necessary to get a good result, right? For those that need the good result. So if gold needs to be revalued, it will be. As we were talking in the last segment, the fact that they've moved the gold around recently in the last couple of years before the tariffs makes me think that they're going to try to do the least amount of monkeying around possible with gold. But the physical demand is still very strong. So, yeah, if they need to bump it, they'll bump it. And the best way to reevaluate it is make up something in the news cycle and just say gold's on a tear. That way they don't get blamed. It's the market. It's people buying it. It's their fault.
We can force it. Let's force it, right? Let's force it. Oh gosh, yeah. Look at with the tariff. We had to. We got to do it, right? We got to tariff everybody. I don't know. 800-951-0592. The half-empty cup. We will talk Texit. Just to give you an update, yesterday was a new all-time record high for the amount of miners signing up. Today, I just looked. There's already 125 new miners today, and it's not even 9 o'clock here in the Valley. 13,500. We will break the record today. I think today, 300 miners in a single day will fall today. We will remember the miner 15,000. It helps, right? Hey, if I'm not signing people up, I can get some help. I don't know. I think we're good for Monday. And possibly Tuesday. And then I think 15,000 falls sometime between Tuesday or Wednesday. And then again, you know what? I don't know. Listen. We may hit 500 miners today, and then all of a sudden, come Monday, we're above that number, Jason. It's going to be close.
And then for the audience here, there was one of to load up or move your position up. That ends at that point.
No. So you can get to the end of August to get up to that 9-pack and get those 2 extra pace centers. If you're already in, you're in the 15,000. You're good. You're good. You're grandfathered in. You're grandfathered in. If you want, listen. I did 3 upgrades already just this morning. Just me. Everybody is looking at this thing. It is, they like to call this the rocket ship. I think people are going to be shocked at how many miners we add a day in a week over the next 8 weeks. It's literally going to be an avalanche. And wait till I tell you about the big mine that's getting ready to come online. We'll cover that right after this. 800-951-0592, Patriot Radio News Hour. Joe and Jason wrapping up the week here, and what a week it has been. As we've got a new member of the Fed, Stephen Marin, all but guaranteeing either Jay Powell's gone or the rate cuts are coming. On top of that, a disaster in the U.S. debt markets, and then a shocking twist where they are now tariffing refined gold from Switzerland, 39%. Nobody saw it coming. Everybody thought it would be exempt. Nobody said anything when the Swiss and the U.S. signed a trade deal last week. Nobody said a word. The Swiss didn't say anything. We didn't say anything. And then late yesterday, news broke from Customs saying, oh, by the way, 90% of all the gold refined in the world comes out of Switzerland, and their tariff applies to the kilo bars, the 100-ounce bars, which is what they do. That is the primary refined gold that comes into the United States, causing havoc in the markets in London. Again, December gold right up against $3,500 right now as the banks are scrambling. Words of a liquidity squeeze in London. On top of that, word that the Chinese, no shock here, may be throwing gasoline on the fire and essentially telling the Swiss, don't worry, we'll buy every bar you have, which is putting all the people that are short gold, Jason, in a really tough spot. Don't be surprised to see gold jump significantly. If we go into next week and we're still talking this thing ain't going away, there's going to be a power move here. $20 gold, $34.95, essentially where spot is for December. $10 Liberties, $17.50 at 800-951-0592. And then last night, if you guys were on Telegraph, for those of you in Texas, Eddie, he's our electrician. Like, we actually, believe it or not, Texas now we have like 3 full-time people that's just dedicated to getting the mines up and running. He released a video of exactly what the mine is going to look like in Victoria, and it is awesome. I didn't even know. We've seen the container. Jason, on top of the container is like this other, I don't even know, it's probably a mega cooling unit that runs the length of the container, and then inside, it's crazy. Because it's all going to be submersed in the oil, but the power, the lines that got to go in there, it's going to be delivered on the 18th, which is 10 days from today. Give it, let's say right around the end of the month, last week of August, first week of September, this thing's going to go live. And guys, I'm telling you, I think it's going to be an avalanche of people. Don't be surprised. I wouldn't be shocked to see another big jump in the price just on that alone. 800-951-0592.